Welcome to the 2023 Economic Depression and Preparation channel. Today, on this September 6, 2023, Hump Day Wednesday, we're just going to talk about how the Dow Jones is going to continue to either flatline or not increase that much in the lieu of rate hikes that are expected. As you know, one of the benefits of having easy, cheap money is the ability to borrow from banks at a low rate, and this affects commercial, residential, international, etc., as every economy is doing the same thing. Please be sure to subscribe to this channel. Preach to me for the latest interpretation of financial news. We're not financial advisors, but we give you the latest interpretation of financial news in the United States, sometimes abroad, and as we see fit. Now, the Dow Jones dropped 200 points, as you can see right here. And this is also, stocks continue to sell off this week. It sank 187 points, which is not terrible. This is not like a doom and gloom type of forecast. But it does reinforce the need of other companies and other businesses, the ability to borrow easy credit. Once the credit lines of credit begin to shrink, and liquidity becomes a problem with a lot of these regional, local banks and some of these national banks, because of the interest rate hikes that's going to affect car loans, home loans, school loans, credit card rates, APRs, and also lending between the bank, interbank lending as they call it. This is going to pose a big problem. And on top of that, oil prices rose another 1% on Wednesday after hitting the highest level since November as Saudi Arabia and Russia extended their voluntary supply cuts. So gas has been elevated all throughout this year, as you know, ladies and gentlemen. Gas prices have been above $3.75 a gallon for the majority of the country. And this is putting a strain on most Americans' budget. You know, we're getting by. Everybody's getting by, doing the best they can, getting side hustles, working their main job. Thank God everything is hadn't broke. Nothing major is broken. However, it's becoming increasingly difficult as many economists will tell you that inflation hasn't gotten down to that 2% target goal. And even though it's not horrible, yes, that's correct. I had a lot of comments, people saying it's not horrible. It's not at 10 and 12%. It's still above 4%, and that's still, we know it's much higher than that according to shadowstats.com. It's more like 8-10%. So that's also a problem. Now, a lot of companies are going to be claiming bankruptcy. You remember Christmas Tree Shops is a company, Party City. They're set to exit bankruptcy, a $1 billion debt reduction. However, a lot of companies are going to be still be claiming bankruptcy, like Bed Bath & Beyond. We've got a bunch of retail companies that are going to be going out of business. And not only that, we're going to have a lot of consumer debt filing bankruptcies. They're not going to show up until next year. This is going to show up at the late end of the tail end, the first quarter next year. So look around March, April next year. We're going to start seeing those consumer bankruptcies on credit card debt. Remember, credit card debt was elevated on the notion. Credit card debt began to elevate as a result of the pandemic, and people were spending money and they had to make do with what they had. So look out for that too. Now, another thing too to look at, I want to show you the survey by edvoy.com, cost of living in the U.S. We talked about this last video, but I want to reinforce the idea. The cost of living in the U.S. is considered relatively high, even though the United States makes the majority of the United States makes more than the rest of the world in terms of salary. The average income, median income per household income for families around $40,000 or $50,000. That's more obviously than 85% to 90% of the world in terms of income. But with expenses of housing, healthcare, and education also rank among the highest in the world. So you can see here, the average cost of living in the U.S., let's use this example here. A one-bedroom apartment is between $1,500 and $2,500 a month. If you live in D.C., New York, L.A., Chicago, Miami, San Diego, Hawaii, you're looking at those type of prices. Even if you're not living in those cities, some of those small and mid-tier cities in the Midwest, and also they're charging minimum of $1,500 a month, not counting renters, insurance, and utilities. Utilities can easily run you $150 to $300. Groceries are now, there we go, $300 and $500 a month. And that's if you have a family more than 2 or 3 people, it can easily run you more than this. Dining out, transportation, health insurance. Insurance has gone up briefly too. A lot of people don't talk about that too. It's not just the property tax insurance in states like Florida, Texas, Arizona, California, Illinois, the big guys, but the insurances for health insurance is going up each time on our paycheck. Every year we do the open enrollment, the prices are continuing to climb up. I know you've noticed that. Entertainment, and I'm seeing a lot of multi-generational families live together in these subdivisions and these townhomes and these in these apartment communities. A lot more cars are parked. They assign apartment communities. Sometimes they assign you a parking space. Well, I'm seeing 2 or 3 cars assigned in the visitor spot and all this kind of stuff. So more people are living together to try to save on costs. Intergenerational families are living together. Grandma, grandpa, cousins, brothers, sisters, parents. To save money on these type of costs, and this is affecting even baby boomers who as well. Internet and phone can easily run you up to $150 a month or more. Clothing, miscellaneous costs. So with all of these monthly costs, one thing that you don't see on here that's going up is your paycheck. Paychecks have not gone up. They used to give you a cost of living increase allowance. That's no longer outpacing inflation. Your savings is no longer outpacing inflation. Even though I must say, this is the good news, is that if you have CDs or if you have a high yield savings account, that 5% APY, annual percentage yield, that's pretty nice. But theoretically it should be higher than that. And once again, the article mentions again New York, LA, San Francisco, all these cities in the US, housing is the highest cost. And the thing is about housing that's so tricky. I know many of you were all interested in survival housing, like tiny homes, or just basic stuff. Like if you want to build like a block center home with permitting and codes and all of that in some rural land in Kentucky or Tennessee or or Alabama or wherever, there's so much permitting involved that it's so hard to live off grid. To truly live off grid. It can be done, but it's very difficult because of the water, sewer, and permitting and all this other stuff going on. That even if you wanted to get like a tiny home, those run over $50K or $60K or $80K, $100K, really. You know what I mean? In some of these states, so they make housing so difficult. At the same time, they don't want the homeless and to get a tent or anything, or even if you're not homeless, they don't. The city, the county, the state, the township, and all that municipality, they don't want you to have. They want you just enough to get into a rental place, but nothing to have your self-sufficient. A 10 building without. Let's say you build a 10 building without plumbing, but you have electricity. They don't want that, and an outhouse. So it's very complicated. And then renting versus buying. You've heard that again. Both can be a catch-22 depending on if you're a temporary worker, if you're a temporary contract worker or something like that. Maybe you're not going to be in a place for that long, more than 5 years, then it makes sense. It may make sense to rent. But if you are a person that's going to be there for more than 5 years, then maybe you need to buy, because renting is just, like you said, throwing money away. Especially with these average monthly rents being $4,000, $3,000, $2,000, and all that kind of thing. And so this is going to be the problem that we face here in America. With these costs, it's not so much that the economy is going down the drain and that we're all going to be in a Mad Max scenario. Is that the input cost to get to work, to get to school, to get to daycare, to get to play activities is gone up here. Transportation costs have gone up tremendously. As well. Used car prices have gone up tremendously, and most people are hanging on to their cars for longer. The average person is keeping their car for 5 to 10 years or longer, and that's just a fact of life. And let me know about what you think about these ride-sharing companies like Uber and Lyft. Do you see a merger or a consolidation of those companies? I do, because the competition is getting stiff here between Uber, Lyft, and all these other Zipshare. These people are sharing their cars and all that. Do you think that's going to be a lasting trend? Food costs have gone up. Like I said, eating out, utilities have gone up, and you're not getting a break on that. And even though these people are now soliciting people in these states, you go to Sam's Club or Costco, they're soliciting you about clean energy, quote unquote, that you can save on your bill and blah blah blah. But that's just gimmick. Your bill is still the same. I think one time I signed up for that in one state I was in. I think I only saved like $5, so it's not even worth it. And then that thing too is that water costs have gone up. The water bills have gone up because a lot of these states were in drought before the hurricane season, and so watch out for your water bill increasing too. Or they say you're going to get a notice in the mail saying they're trying to improve infrastructure because a lot of people moved in their area and blah blah blah, and they're going to have to raise rates. So California water costs are higher, but not just them. It's going to be other states in the Midwest and the South and the Northeast are going to be raising water bills to pay for infrastructure or whatever the capital improvement or whatever excuse that they come up with. Now, guys, one thing you can't do, of course, is we can cut out some of our miscellaneous expenses, maybe entertainment, movie tickets, maybe get a subscription, as many of you guys have anyway, and you can watch movies at home, or just cut back on some of your cable and just have internet and just stream your movies at home, like many people have been doing with a Fire Stick or a Roku, a Fire Stick or something like that. It's just as good. So little things like that we can cut back on our own and things of that nature. But regardless of that, God bless the child that has his own, is what I've always preached on this channel. And so that there's going to come a point that, it may not be perfect. We may not be able to prepare for every situation. Obviously, we know that. But we can prepare. Some things are in our control that we can budget and that we can help to kind of like mitigate the damages that we're going to face in this next year as things start to flatline, as this economy starts to flatline. Not a total crash, but just things are slowing down in terms of borrowing. And that the borrowing power is what you need. And, your money going, the purchasing power is what you need, that your dollar it can stretch further, and the dollar is starting to wear thin. It's not stretching as far as it used to. 100K used to be a lot of money. 100K used to be a lot of money back in the 90s and, stuff like that in the early 2000s. All of a sudden we got past all that, and it's like, man, in some of these cities, 100K, I mean, it's just, barely getting by. I don't know if that's going to be considered middle class anymore because of the level of inflation that's going on. Let me know what you think in the comments. God bless. I'll talk to you very soon. Thank you very much for listening.